Joining us at a first on CNBC interview is CEO Brian Moynihan with our very own Leslie Picker. It's great to have you both on board. And Leslie, kick things off.
Thank you so much, Kelly, and thank you, Brian, for being here on this second quarter earnings day. So you maintained your net interest income guidance, even with that better than expected loan growth, as well as fewer rate cuts expected this year. Net charge-offs remain stable. How would you characterize the current operating environment? I mean, this feels almost like it could be a peak for the banking industry.
Oh, I don't think it's a peak at all, Leslie, and thank you for having me. We're still building a momentum up in net interest income. So we told people today, yes, we hit 14.8 billion this quarter, but we're saying by the fourth quarter, 2 quarters away, we're between 15.5 and 15.7. So, $700 million or $800 million of additional net interest income then capitalizes into next year. So we just hit a record number this quarter, and we're growing from there. Now, how does that happen? It's a 7% loan growth and 4% deposit growth we had over the last 12 months, which is now capitalized in the base, and a good discipline on deposit pricing and loan pricing that plays into that. So we're on a wave that's going up. A tide is coming in, or whatever the right analogy would be, on NII, and it's growing each quarter, and it's grown for 4 quarters in a row. We'll continue to do so. It's different than other people, and we will be up 6 or 7% this year versus last year, and then that'll carry some momentum into 2026.
Yeah, less markets exposure for NII for you all relative to others. Speaking of the markets and kind of the macro backdrop, the markets have been digesting a slew of headlines today and in recent weeks surrounding Fed independence. President Trump now says firing Fed Chair Powell is, quote, highly unlikely unless he has to leave. How do you see this issue playing out in the markets, and do you think Fed independence is at risk here?
Well, I think let's back up and talk about principles. As you think about across time, the Fed was set up to be independent and have a dual mandate: unemployment, price stability, i.e. inflation. And their job is to manage, add their management of the economy through short-term interest rate adjustments to accomplish that outcome. And I think a stable central bank is really very important, and very important in the United States, because of this size economy with $30 trillion plus of debt out there held all over the world, with a dependence upon trade flow. The stability of this country is actually necessary and important to the whole world. And I think a stable Fed and independent Fed is key to that. And I think the cooler heads, and in a year, we'll have a new Fed chair, because that's the right of the president. But I think if the market would really look at a change prematurely as being something very different. That being said, it's a political process, and it'll play out. But I think the key is, remember that the core thing is that an independent Fed is critical to the operating of a great global economy like the United States.